Hey everyone, how's it going? Hope everything's going well. I wanted to do this video on irrational exuberance, a term that Alan Greenspan came up with in the 90s to describe the stock market. Well, let's just look at it right now. 2018, you've had so many up days, right? You've only had one down day on the 10th of this month, and it went down three handles. I mean, it was down roughly like 10 to 12 points that day, but then you saw a strong rally. They announced that China may dump our treasuries or whatever, some headline like that, and you saw markets sell off. And shortly after that, markets keep on roaring to all-time highs. And you see a lot of chatter by technical analysts, fundamental analysts, saying that, hey, this market is in a bubble, this and that, things that I always used to talk about. But this is just one important fundamental characteristic of the stock market we have to be aware of. The yield curve is still positive, right? If you look at the 10 and the 2 year, it's 56 basis points. If you have a yield curve that's upward sloping, then at the end of the day, the stock market, yeah, you're going to see corrections, you're going to see pullbacks. I think we're overextended this moment based on some indicators like the DSI, the Daily Sentiment Index, that's over in the 90s, mid 90s. Yeah, we should see a pullback. But until this curve becomes negative or close to zero, this stock market has room to go way higher. And they're probably going to raise rates a few times this year. And what I want to notice is, or look at carefully, is the 10-year yield. Is the 10-year yield going to go higher? Meaning bonds are going to sell off. If that happens, then this can confirm that the stock market most likely has more legs to it. And as long as the short end of the curve doesn't exceed the long end, the 10-year, then the stock market's going to keep on going higher and higher and higher. And more people who were bullish for a long time are going to call for a crash and crash and crash. And the most important indicator, like I told you, is this yield curve. And we should continue to pay attention to it. The other thing is, you're starting to see with these tax cuts, you're starting to see more inflation pick up, right? Noted by the CRB. The PPI numbers didn't show that much inflation, but if you look at the CRB, which consists mainly of natural gas and oil as the top components, oil has been rising, right? I did videos last week and a little before then saying that oil is going to correct. It hasn't correct. My basis was based on the commitment of traders. And when you have a market that's going up and up and up, and you start to see tax cuts, you're going to definitely see inflation. Now, I do expect higher oil prices later on this year. I was just anticipating a correction because of the hedgers just shorting the daylights out of oil, and they even put more short positions last week as it continued to go higher. That was one mistake on my part for not reading the market in terms of price action. I thought that it would correct a lot sooner than it has. So I'll have to pay for it in terms of my spread positions in the futures market. But I did notice there was a potential of Russia not agreeing to the OPEC deal, that they want some changes done. They may leave that OPEC deal. So that may be bearish short term for crude. So just putting that out there. So when you start to see people going to the stock market like this, right? You see people saying, "Hey, this is like how the market was trading 5, 6 years ago with higher crude prices, higher gold prices, and in addition to that, more inflation." But the thing is that markets don't strictly go up in a straight line. You need to see pullbacks, and I think that's where we are with the stock market short term and oil prices. But sometimes I do play it from the short end. Sometimes I do trade some call options for crude just to prevent my positions from blowing up. And I do go long SPY options as well because this market's just flat out insane. But anyways, guys, let me know what you think, where you see the stock market going, and I'll talk to you later. Bye.